Hello, lovely people of YouTube, and welcome to today's update. I want to go through a few things, including currencies, and then we'll look at some commodities, including oil and gas and gold and so on. And we'll also look at the stock market. So to mix things up a wee bit, let's start with the dollar, and we'll look at the dollar index. And this is the chart at the moment. It's always good to get a little bit of history on the instrument that you're trading and studying. We can see the dollar index has rallied up during the last part of this year up to about 107, which is more or less the sort of midway point between a strong dollar and a weak dollar, actually slightly strong. If we look back in time on this daily chart, and in fact we can go to the weekly chart too, you can see we're at the upper sort of zone of this index. The dollar against other currencies, a basket of currencies including the euro and the Japanese yen and the British pound and even the Swedish krona. So that's where we are at the moment, and in fact if you compare this level to where we were in 2008, we were down at 71, we're now at 105 or 106. So about 30% stronger than we were in 2008. But looking back further in time, certainly not at the highest levels that it's been in history. So that red line represents roughly where we are at the moment. And you can see, even though it looks high compared to recent history, it's actually not all that high overall. So the dollar has been higher and it has been lower. But at the moment, if we zoom into the day chart, you can see we had this rally up. We broke down through this trend line. We've tried to backtest it from underneath and failed, and we've moved down fairly sharply over the last number of days. So that's where we are at the moment. We just want to kind of hold beneath these resistance levels and perhaps see a path, something like this, or maybe we even have to do something like that. I don't know. But so far so good, and it looks like the dollar is generally coming off, which is good for stocks and good for gold and good for the major currencies against the dollar, and also good for some commodities like natural gas and oil and so on. So we need to bear that in mind when trading those. So whilst we're on currencies, let's have a look at our current positions. We're long on the euro and the pound. These are naked charts. I don't have a lot drawn on here at the moment. This is my backup laptop I'm using today. So we're in a bit of profit on the euro and the pound, just long from these lows. And then the dollar yen, well, we're short on this one. We'll have a look at this in more detail shortly. But we've just reached up to these recent highs on the dollar yen after a fairly sharp sell-off a week or two ago. When we were in the cut and the thrust of things, we saw this massive rally up and then this trickle down, waterfall down. And it looked like a massive move. But in the bigger picture of things, if we just zoom that out on the day chart, you can see it was a very tiny move and there's a lot to go down below us. Our target overall for the dollar yen is in the low 130s, so that's all the way down here on the chart, a long, long way below us. And that was just actually a little blip. But when you look at that sort of move on the hour chart, it looks enormous, of course. So it was quite big in terms of pips, but in terms of a percentage move and in comparison to the overall chart, what looks enormous here wasn't very big at all. Going back to the weekly chart, you can see that's illustrated really well. So on the weekly chart, we had this wick high 2 weeks ago, and then last week we moved up back to that same level. And we're almost at the level that we reached in October 2022. Not quite, we're just a few pips shy of that. But we may have to test that level just shy of 152 and potentially even just push through it and move a little bit higher before we see further intervention from the Bank of Japan and further sellers, including hedge funds and institutions who are now beginning to sell this market because the risk-reward equation is becoming so favorable. So that's all I want to say on currencies for now, really. We remain long on the euro, long on the pound, and short on the dollar yen. And the dollar yen I've added incrementally small positions in as we rallied off these lows, where we covered quite a lot of our hedge positions the previous week and took some profit on those moves down. So here's the dollar yen on the hourly chart. This move up has been very consistent, very precise, very beautiful, and way too neat. And this is going to break down at some stage. We may have to have a blowout top first through this channel line. Let's have a look at the channel on the day chart. And in fact, I probably need to go to the weekly chart and zoom right out. And there's this very broad channel that we're trading within. And we're right at the top of that channel now. Going back to the day chart and just cleaning this up a wee bit, we've got this top line here, which is another channel line. I'm actually going to delete that and draw that in as a parallel channel at this stage. So let's just put a line in along the top there. And in this case, it's red. I suppose that's appropriate because we're looking to sell. And you can see we're right in the center of this very neat, beautiful recent channel. So we're actually at the channel center line on this day chart and below this blue line, which is the larger channel top. And then going back to the 4-hour chart, you can see how we're just reacting off that blue line right there. But we've got this red channel, this shorter term channel. And if we do reach the top of that channel, well, then there's quite a long way to go. That would take us all the way up to 153.50. I don't mind this too much because as this currency moves higher, I'm just adding very small incremental trades in. And the way I see it is I'm getting a better price on an instrument which is almost certain to move down, not by 100 pips or 500 pips or 1,000 pips even, but potentially even 2,000 pips. So that's our strategy on dollar yen. I'm going to go straight across to commodities from here. We'll start with natural gas. Now, this is the 4-hour chart on natural gas. You can see how we've tried to hold above supports 3 times in a row. First of all, around about this 200 period moving average and the $3.15 level. Then we dropped down to about 305. We tried to hold above there, making an attempt to rally, but blocked by the 200 period moving average. Then we fell down to $3 and we're moving back towards the underside of that 200 period moving average and into these resistance zones above us. We're long from an average price of $3.10. I initially bought just below $3.20 and then I bought again just above $3. So our average price is $3.10 and we're looking for a move right back up into these highs and potentially even eventually this channel top again, which would take us above $3.50 and $3.60. This is the way it looks if I spread it out on this 4-hour chart. And if I switch to the daily chart, you can see we're still roughly trading within this channel. We'd like to hold above $3 at this stage. Not only is it the 200 period moving average on the 4-hour chart, it's also the 50 period moving average on the day chart. You can see how we touched that beautifully and bounced off there with a little bit of a gap on the Sunday night rollover. Let's go back to the 4-hour chart and have a look at that gap. And there it is there, just a tiny little gap. So we've got that little gap below us. That's a weekend rollover gap. And we've got another unfilled gap above us here at around about $3.40 to 45. So far we're doing pretty well. So we're in some profit on this trade. And I'm hoping for this to continue upwards and eventually get up through these moving averages and these resistance levels to the bottom of this gap at about 340, then up to the top of the gap at about 347, and eventually up to this channel line. This pink zone that I've got drawn in here, out of interest, is our original target going back towards the beginning of this year. If you remember, I kept on saying we're looking for a rally to $3.40, 50, 60, or 75. Well, we just about perfectly did that, and as it turns out, the top of the channel arrived there at the same time and the same price. So we're still trading within a beautiful channel. We're at the middle of the channel right now, more or less at the center line, just below it. We're below the 20 period moving average on this day chart, but we're above the 50 period moving average. And on the 4-hour chart, we're above the 20, but below the 200, the 100, and the 50. So we've got to get up through these moving averages, hopefully up towards that gap there, starting at $3.40 up to 47, and then up to the top of the channel to revisit our original target area going back to the beginning of this year. If this level fails at $3, I'll be looking to buy at $2.85 and add to my position. It's not a complete position, but it's a pretty healthy one. And if it happens that we fail $2.85, I don't think that's incredibly likely, but if we do, down here, then I'll hedge my entire position in the 270s. So that's the overall strategy for natural gas. So we'll be looking to exit this trade up near the top or hedge the trade below 285. WTI, I really don't know. I mean, we're long on this. We're long from $78 and we're now at 76.45. So we're $1.50 out of the money. And the fact that we're below the support and the 200 period moving average isn't very encouraging. And my stop loss is at $72. Quite possible that we'll move down there and that this trade will fail. I'm not too sure which way this is going to go. I have to say at this point, it looks weaker rather than stronger, but I'm leaving my stop loss in place at $72. And we'll reevaluate thereafter. Bitcoin, I'm looking to sell much higher up or buy much lower down, so nothing on that. US 10-year yield, we were talking about the dollar and the dollar index and the major currencies earlier. This is still holding down quite nicely. I do think this is a fairly constructive pattern though, that we could see the 10-year yield moving back up to the 20-day moving average over here, and potentially these red lines. We've got a small downward sloping trend line. We've got a horizontal flat bottom there just above the 20 period moving average. So it's possible we'll continue this bounce off the channel bottom and move up slightly and hopefully hold beneath the sort of 4.8%-ish level, somewhere in that zone. I could draw a circle there actually to make that clearer. So that's the sort of area that I'm looking at. I'm going to make it red so we know it's a bearish selling zone. So somewhere up here, if we do rally, as I said, this looks a little constructive and we are bouncing off the channel bottom. But you never know, this might continue to move lower. And if it does, we should see the dollar begin to move lower again. And we should see the other currencies rally against the dollar. And we should see some strength creep into gold and stocks and so on as this goes down. But we may have to move higher, in which case all of those other instruments will move in the other direction and frustrate us a little bit further. So Brent crude oil down here, pretty similar to WTI, below the 200, below support. And more of a consolidation pattern here, no great sort of impetus to rally higher, just holding there more like a bear flag. So I think we could see some further weakness in oil and we'll just have to let these trades play out. And then the other one is sugar. Well, I've been showing you this chart for so long now. It's become the messiest chart in the world, but basically the size and the shape of these two ovoid patterns are identical now, the same length and same width and everything, and we are trying to move down through that rising channel line again. And all I can say at this stage is we're going to move down, or we're going to have to move up to the top of this channel and test the 29 cents per pound level. We're now at 27.25. But with a bit of luck, this will continue to move lower. I think this week will show quite a lot. We're going to see inflation numbers and more jobs numbers and various other economic reports coming out of the markets, which will influence things like the dollar and perhaps commodities as well. I still think this is going to move down, and our targets are all the round numbers, 26, 25, 24, 23, and eventually 22. Apart from being round numbers, those levels all line up with the fib levels and horizontal lines that are already on the chart. So I'm happy with the targets on this. We just need this to get going. And then finally, I want to look at stocks. Overall, my opinion on the stock markets is generally bullish, but I think we're due for a pullback on NASDAQ and S&P, and a couple of the names like Nvidia and Microsoft, perhaps Apple, Tesla, I'm not too sure about. It's a bit all over the show at the moment. And a couple of other names like Google and Amazon and so on. But I don't want to focus too much on the individual names, apart from saying we are now short on Microsoft and on Nvidia. And these trades are just really for pullbacks, relatively short-term trades to maybe grab $5 or $7 or maybe even $10 on the pullbacks on these names before a continuation of the rally. We're also short NASDAQ and S&P. And for NASDAQ, I'm looking for a pullback to the channel top. This is incredibly overbought at this stage. The rally from the recent low up to the high last week was 10.45% on NASDAQ and 7.66% on S&P. So really in the last 2 weeks, we've moved as much as the average move in an entire year on both of these instruments. So NASDAQ's normally about 10% per year, maybe 11, and S&P is about 7 or 8.5% a year. And we've moved those distances on both of these in the last 2 weeks. So incredibly overbought, overdone, overcooked. And although my bias is still to the long side on the stock markets, there are all sorts of dangers which put long positions in jeopardy. For now, however, though, I think on the S&P we've reached the channel top. We've had a 7.5% rally. We formed an expanding megaphone pattern here. And I think we could get down to the bottom of this megaphone, which would take us to this red support line, a really key line, at around about 43.35 to 43.40. On the NASDAQ, and this is something I've been pointing out for quite a long time, we've actually broken out through the top of the channel already. And this channel has actually turned out at this point to be a bull flag. And I was pointing out that a bull flag necessitates lower lows and lower highs, which you see in this flag formation. So every time we make a high, it's a lower high. Every time we make a low, it's a lower low. But that forms the bull flag pattern. It's required to form a bull flag pattern, of course, lower lows and lower highs. And now we've broken out through the top. But after an 11% rally, I think we need to pull back. And the top of this channel, the breakout point, is the most obvious place. And that would take us down to about 15,150, 15,200. We're currently at 15,470. So I think we need a bit of a pullback on these. I wouldn't be surprised if we got to the top of this channel and maybe a little bit lower. I always like to see channels being broken and tested and pushed through either way to try and clean up the market, get rid of some of the stale hands, the weak hands, the Johnny-come-latelys, etc., as I always call them. So maybe a bit of a clear out by moving back down inside the channel just briefly, and then a move higher after that, all the way back up to 16,000. And then eventually, I think we could reach the all-time high at 16,750 thereabouts. We're at 15,500 just about now, so we're not very far off at all. When we were right down here after this first rally, people were saying, well, this is, the start of a bear market and the market's going to continue downwards. But I was pointing out, and I put a number of controversial tweets out on this, that I thought that this market would rally up into this area that we're at the moment. I didn't think, however, that I'd be talking about reaching new all-time highs. And I'm still not 100% convinced about it, because there are an awful lot of people that have suddenly gone bullish on the stock market. We can see that on the Fear and Greed Index. This index is now at the sort of top end of fear, approaching the neutral zone. If we hold up at these levels and perhaps move slightly higher during this week, we'll definitely go into neutral and potentially even into greed. But just 2 weeks ago, we were in the extreme fear range, down below 25. And at this rate, we'll be back into the neutral zone within 2 weeks, which is really, really quick. And it just shows a massive swing out of extreme fear into neutral and potentially even into greed by the end of this week. So you can see how the market sentiment has shifted, and that worries me quite a lot. What worries me is this very obvious breakout through this channel, this bull flag, the fact that the market's turned incredibly bullish, that there's been a huge swing in sentiment, and that we've got all sorts of headwinds that this market's surging into sort of willy-nilly ignoring a lot of the bad news. So it all makes for a potentially pretty toxic brew, which could lead to one of two things really. A massive surge higher, an irrational move, taking out these recent highs at around 16,000 and then moving up to the all-time highs and then surging forward through that, created by this crazy mix of sort of fear and relief and uncertainty and a mixture of different economic numbers which come out, which are confusing. Some are really good, some are really bad. And that toxic brew, as I've just called it, could lead to two things, as I said, this massive surge higher or a dramatic collapse in the market. I don't know which one of those is going to take place, but for the moment I'm going with the bull side simply because of the thing that actually scares me the most, that we have broken out of this bull flag on the NASDAQ. We're trying to break out of the bull flag on S&P, and well, we'll see how far we get. For now, however, we're short for a quick pullback, perhaps down to 15,000, maybe even lower, down to 14,900 and something, 14,800 and something, before exiting those shorts and then potentially reversing to long if we see that sort of signal coming out of the 4-hourly and the daily charts as we go forward. I'll just very briefly mention Nvidia here as we close off. And if you've been watching my X feed and some of my videos, you'll have seen I drew this circle in here as the potential selling zone. And we've now got into that circle and we've sold roughly at this red line here, this horizontal line. We've got this channel that we broke out of. We broke out actually briefly for a moment, climbed back into the channel, traded within it, gapped down below it, and we're coming back up to the underside of this channel. Having broken out of this shorter term downward sloping channel, we're reaching the underside of this longer term upward sloping channel and this previous resistance here, which we've now just penetrated. I'm not too worried about the channel break or the break above this resistance level. We are very overextended on Nvidia, as we are in many stock names, particularly the Magnificent Seven yet again, and we're overextended on NASDAQ and S&P. So I still think we could pull back down to the top of this channel, and like NASDAQ, I think we could come back into the channel a little bit down to these moving averages and eventually move higher. How high, I don't know, but my overall target, believe it or not, for Nvidia is not $600, but it's closer to $300 down at the bottom of this earnings gap and quite a long way below our current price of $483. Well, I hope you enjoyed all of that and made some sense of my ramblings. I hope you have a fantastic trading week. And if you did enjoy the content, I'd really appreciate a thumbs up and a subscribe and share it with your friends. And I'll see you in the next video. Take care.